All right, Christina, can you hear me?
Yes, I can, Steve. One second. Let me jump in
Oh,
and do the intro. Thanks. Hi, everyone, and thank you for joining another Genius Wednesdays brought to you by the Coin Genius team. Today is Wednesday, March 11th, and the market is going bonkers. We have a whole bunch of stuff to show for you guys with slides and lows and bad opens. But with that, I will turn it over to Mr. Steve Kwan.
hi. I'm going to keep this extremely short because I guess those that are watching markets, whatever market that may be, whatever it's equities, crude, metals, Bitcoin, shitcoin, Ditcoin, treasuries, euro dollars, you've probably seen some move, but I was asked just to show some basic charts anyway. These are all the past 5 days. Here's Bitcoin. 9,000, now 7,700, and I believe it's even lower. That was a couple hours ago. Here's crude, 48 to 32. Now, this is actually important. This is probably one of the most important ones. This is 10 years, and this was the strongest of the strong. And you even, when you start to see the strongest of the strong fade, that's when it tells me there's starting to be like a major. If you didn't think it was major, well, it's becoming more major. Here's gold. They held it up as long as possible, but eventually, you've heard me say the saying, eventually people need to eat. And if it's sell your gold, sell your Bitcoin, sell your treasury, your crude, your Apple, whatever, I'm going to sell something because if I don't eat, then I don't survive. So moving on, this would be the S&P, and I could show the Dow, I could show any equity, but we're seeing the same pattern here. S&P, Bitcoin, crude, huge drop, then flatten. So besides beating a dead horse, I just wrote some notes, and this will be short, 60 seconds or less. When you start to see when I start to see the safe haven trades coming down, that's when I say the proverbial shit is really hitting the fan. Sorry, Christina. I know I was told not to swear, but it is what it is. The magnitude of some of these moves has been far greater than '08. I guess the scope, as in the longevity of them, is still relatively new. Obviously, markets do what they're going to do. They may very well bounce back significantly in the next day or two. I don't know. I can't tell you that. I'm not making another market call, but I can just tell you that we're coming to some real pressure points where people have to make decisions. So when those come around, here are some of the questions I would ask. Well, what have you heard about why markets are going down? Some are saying they were bubbles. Others are saying it's the coronavirus. I've also heard it's a currency war. But really, does it really matter? If you're losing, you're losing. If you're making, you're making. That's kind of what it all comes down to. Now, these are questions, or these are ways I was told never, ever, ever to enter the risk manager's office and start a sentence with. I go, I'm only down X amount. Or when this comes back, I'll make a lot of money. Well, number one, if you're only down X, what if it doesn't come back? That could be a short, a long, that could be Bitcoin, Apple, whatever. Like, don't assuming things doesn't really help. Now, moving on, I guess I would just focus on some important things. Basically, liquidity, and to ask oneself, why are you invested? Why am I invested? Why is Christina, whomever you are? I would simply pose these rhetorical questions. Ask yourself, why are you in investment A, B, or C? Where is your stop loss? Are you sticking to your strategy? Does the position match the liquidity profile of the market? Are you too big for the market? Are you a small player where your size isn't going to really affect it? I think these are more important questions to ask. Like, essentially, where can I get in? Where can I get out? That's really what I care about now. And I move the final questions to blockchain and crypto. Ask oneself, why are you invested in blockchain or crypto? since that's what this is all about. What got you in? What's getting you out? Are you getting out today because everyone else is? Are you getting out today because it was stop loss? I think that in times of volatility, it's important just to take a step back and ask yourself, if this was a point that you wanted to get in before and you've been on the sidelines, what's changing your mind? Or if you're taking a loss today, is this where you would have taken it if the Dow wasn't down? I think they're important. And finally, this is the ultimate question. Are you invested in the asset or are you invested in the people behind the asset? I would pose a question like, Bitcoin is an asset. Dash would be an asset with people behind the asset. Are you invested in Dash or Bitcoin? And I'm not saying these are the only two. I'm just using these two as an example. Finally, I've said this before and I'll say it again. What truly makes something valuable is its liquidity. Now, people may shoot me for saying this, but Bitcoin, in my opinion, its technology isn't the best. It's not the fastest, but what does it have? It has the biggest liquidity pool because if you can't trade Bitcoin right now, I could trade every other pair that's on every exchange and essentially create a hedge. So that is my closing statement, that liquidity is the most important thing to me, where I can get in and out. And that's it. I will stop my presentation there and let others talk because I know people's time is limited and I don't want to kind of hog the mic today, so to speak.
Thank you, Steve. I'd also like to note that we do have a special guest that just joined, Crypto Kyle. Kyle Rea has joined us. He is a market analyst in the crypto space and capital markets as well. And the guest that we have on today has a lot of, all of our contributors have a lot to say about the current state of the markets. Kyle, if you'd like to introduce yourself, and then I'd like to hear from Oz Sultan, and we'll turn it over to the roundtable. Kyle's like, haha, just kidding.
There you go.
There we go.
Oh, sorry. Yeah. I've been in the space since 2016. Started trading early 2017. Stuck with it. I don't know what else to say other than it was just announced that this is a pandemic for coronavirus, and I've never traded in a pandemic before, and I'm sure most people haven't. So this is going to be interesting.
That's an understatement. I know that Steve is saying this is already feeling worse than 2008. Oz,
Yeah.
you had quite a few pieces of commentary prior to recording. Would you like to reiterate that for the team here?
Yeah, so this is going to be an interesting one to ride out. OPEC's going to push oil prices probably further down, which is going to have some cascading impact to the Russians and the Chinese. Chinese consumption is down to the point with the global oil prices being what they are, that I saw a buddy of mine sharing $1 lower end unleaded gas in Kansas. So we're on the one side with petrochemicals and oil, we're looking at 1980s prices. On the other side of this, consider the fact that China's trade with us is about 8% of GDP. America will probably weather a lot of the currency fluctuations a bit better. But Italy has already suspended payments of mortgages, and the Eurobank, or the central bank rather, is already reducing interest rates. And so what's going to be kind of curious is that we were already in a negative interest rate zone to prevent stagflation in many, many countries, with GDP in some of these countries probably halting for at least a month or two. There's going to be some interesting trends. One is I think the euro is going to continue to crater. Two is I think the dollar is going to continue to remain okay for at least 60 days. Three is I think the yuan is going to have to be restated. They pumped in a bunch of money about 2 weeks ago, but we're looking at full pandemic numbers, with the calculated numbers being over 1 million infected in China, and with unofficial numbers showing numbers that are much higher than that. Um, the last thing to look at, I think, is as well is the capacity to stand up additional drug manufacturing outside of China. The U.S. Army just signed a deal with Gilead, which is based in France, which has a lot of European manufacturing. However, I would note that a lot of countries whose drug supply chains are going to be tied to China are going to have significant problems, just even securing, some of the basic compounds that they need to fight this. The need to use HIV retrovirals is going to drive cost up significantly in many sectors. Um, and I think the overall impact that you're going to see to global markets is we've already had, you know, uh, breakers go off in New York. I think you're going to see that happen a couple more times, and we're probably going to look at a reasonable flattening of a large number of the stocks whose supply chains are decimated. So I think that's kind of my perspective of where to start looking. One is on the fiat side of things. Foreign currencies are going to take massive hits. And on the trading side of this, for traditional, I would say traditional stocks, bonds, options, the more their supply chains are disrupted and the less they do about it, the more impact there's going to be to these companies, because at the end of the day, they're going to have nothing to sell.
That's an excellent point. Just getting the materials over here. That and, just a lot of brick and mortars are still going to take a hit as well. Steve, I'm really curious. You were there in the 2008 crash. Can you tell me what is reminiscent or what the macro factors are that, worry you to the level of this, situation?
Sure. I I guess in 2008, it started in 2007, where I remember certain days the Dow would drop 3 or 4%, and it's like, well, what's the story today? And it was, oh, subprime's a problem. And then the next day would rally back 3 or 4%. I'm like, what happened? Oh, they fixed subprime. And then once I realized that that isn't possible, it's like if someone said today, oh, we've cured coronavirus, and everything went up X amount, and then tomorrow is back down. It's like, oh, corona, that would seem ridiculous now. Now it's totally different because I guess in my opinion, there's multiple levels. As Oz just alluded to, the actual virus is one problem, but it creates another problem. Just like in 2008, the mortgage industry created a problem where it caused a boom in construction and home building and home decorations and lighting. But then when that went, so did it. Was the whole cascade effect where I look at it now and I just look at the amount of leverage. Like my wife and I were looking, it's like, oh wow, Apple's down to 300. Oh wow, Google's down to 1300. These are by no means, in my opinion, cheap prices yet. Like there's the angle that this started at this time, and the velocity of some of these moves is fast and furious, but I guess in equities, there's there's a lot more to go than in something like crude. Like I know the most it can decrease is $31. Why? Because I guess at $1 a barrel, I have people that would buy billions of barrels, and I shit you not. Like there's just certain things where a commodity has a bottom. Whether that's $1, a penny, I don't know. I can't tell you. But what I can say is to see the VIX above 40, above 50 for multiple days. And when I keep hearing people on CNBC, oh, well, there's great opportunities here for the long term. Dude, this isn't a long-term market. Like you tell Goldman or whoever your clearinghouse is that you're a long-term trader, just ignore your mark to market today. Guess what? You won't be here tomorrow. So that's my whole point, is that it needs to be warranted. Like what people what people's time frame is, it best match what the markets is, because if it doesn't, that person most likely won't be here for when the turnaround comes. And I don't know. I'm not saying things are going up or down. I'm simply just trying to give information that in times like this, expect anything. Don't be surprised if the Dow has an up 2,000 day zone. But
Hey,
also
Steve.
don't be surprised if it goes, yes.
Sorry, I understand you're giving advice on both sides, but let's do some mechanic fundamentals about how people can hedge their bets and actually have like diversified strategies, how people can make money in a recession. I know that there's some mechanics there to give some hope, but right now it just looks like a massive landslide. And so I will need to talk, with the rest of the roundtable here, but this is just so fascinating and you're such an expert. Can you tell us a little bit around hedging strategies and not losing your shirt in a recession?
Well, I would say the first thing, and you've heard me say this, when something's going up, it has to stop going up before it can go down, and vice versa. When something's going down, it has to flatten before it can go up. So here's the simplest question I would pose. If there's an investment that any person listening is uncomfortable with, take it off. Long, short, left or right. If you're not comfortable with your own investment, that's telling you there's something wrong. That could be 10 cents worth of a gumball or $1 trillion in crude oil or zero point zero 0.01 bitcoins. It doesn't matter. If you're uncomfortable with it, take it off. Evaluate it. Like, that's why the markets are great, because you can get right back in. But I think that in times like this, simply evaluating what's winning, what's losing, what's not, what's doing nothing, those are the best things for people to do, is just take a breather. Like, watching something go down is painful. I've done it. I've done it probably more than most people on this call in many magnitudes. Like, it's a horrible feeling. I get that. And I think that the number one piece of advice I would say is, if something's uncomfortable, and that usually happens in a loss type environment, if you're uncomfortable with it, take it off, take a breather. You can get back in 2 minutes. Just think, why are you in it? Why is it losing? Or on the other side, the problem is we don't ask that question often enough when things are going up. It's, oh wow, I'm in this investment and it just doubled in a week. Why? I don't know. So all of a sudden, that person is a great trader, a great manager. Are they? Or was it luck? Or is it luck? Or is it unfortunate luck that someone's in something that's losing? So I would simply say, if someone is uncomfortable with it, take it off and evaluate and then go from there.
Nice.
Yep, I would
Kyle,
agree.
you're kind of in that category. I'd love to hear your thoughts on this.
Crypto. Okay, here's the thing with crypto. Crypto. Okay, when crypto's going good, it's going good. When it's not going good, the percentages can destroy you. Having a good diversified portfolio is good. When you get all of the signals, all of them, except for maybe like one if, you want to go in that sentiment. Being smart, okay, here's what I learned. Even if you get all the signals, you can never know for sure. Like, how are we going to know coronavirus just like came out of the blue and just wrecked so many people's lungs or whatever? How are you going to know these things? There's always that if. So if there's anything I learned from all of this, it would be never go all in on one sentiment or another. It could switch. Even though I'm a momentum trader, if you like look at Bitcoin or Ethereum chart or whatever, you're going to see a time zone where it's just like going and going, and you know for a fact that it can't reverse because it's in momentum. But that's not true when you realize that everything is a ripple effect. and everything is psychology or sociology based. The whole market was created from someone's mind. So if you understand how a human thinks and what reactions that they're going to take given any particular circumstance, will help you play the game a little better, I think. So this goes outside technical analysis, because like in crypto, there's people are like all in on fundamental or all in on technical. Like they live or die by Bitcoin and they don't care. They'll buy it at whatever level and just sit for years and years. Okay, that's one thing. If you're a trader and you're getting into margin trades, you need to protect yourself. Like bottom line, protecting yourself is basically like setting stop losses. When you do that too much, you start taking away your portfolio. If you have $1,000, you take away 10%, you get 900. But now it takes more than 10% to get that original money back. Every time you do that, it hurts. So it's like when Steve says, just sit on the sideline. Sometimes you can't. We're in a margin long. What am I going to do? Come out and pull my money and sit for a couple minutes? It's like I'm all in on some long positions. Not all my money's in a long, but what I'm saying is, how do you protect yourself? You have to treat this like a business or a game plan before you put any money in. Seriously. Like, strategize everything, roadmap it all. When you have someone else's money too, it's like, you got to know your shit, you know? And
Kyle,
this is the
you
first
just hit
time
the nail on the head, man. I'm sorry to interrupt you, but what you just said is that is, you have to have a game plan ahead of time. That's I can't, what you said there, it sounds basic, but that's it. Like somebody going into something with no stop, no target, it's like, wow, dude, that's pretty much a free meal for me because I'm going to, grab it. And the other part is, yes, a non-levered trade and a margin trade are extremely different. And if you want to explain to the general public the difference, I think that's very worthwhile.
All right. So a regular trade, basically, let's say I want to buy Bitcoin today and it goes down 10% tomorrow. Okay, well, I'll just get out at 10%. If I don't want to be in it anymore, okay, I'm out. So I took a little hit, big deal. If you do margin, depending on the margin size, you're basically borrowing money versus what you have. So if you have $1,000, you say, I want to go in a 2-to-1 margin. Now you're borrowing to do $2,000 trade rather than $1,000. So if it goes up 10%, you just made double what you would have made. If it goes down, you just lost double what you're going to make. So with margin, different platforms have different settled positions. Like if you reach a certain amount of losses, they just straight up close everything. So how do you avoid stuff like that? Basically, you need to set a stop loss immediately. But here's the thing. If you're doing a stop loss, like I just said, if you take a hit and you do it enough times, you just lost your portfolio. Who wants that to happen? So
Not Amar. Amar's got something to say about that. Amar, tell him about your experience real quick.
I was into trading too. So as a beginner, I started trading on bitmix.com with the margin trading. I just put my $50 in it. And then after losing like $200, and I was like, now I get the idea of actually doing it. And then I was a little patient and everything. And I went from $50 to $1,100, and then from 1,100 to 2K, and then back to zero.
Yeah, so I know so many people, like I'll go on Facebook. How many people have, as soon as I saw Binance put 125 times leverage, I'm like, oh my God. Seriously, they know the psychology of their users so well that they went above and beyond and went above the BitMEX 100 times, 125 times. Tell me, with 1%, you're done. All it has to do is go 1% the wrong way, less than 1%.
They'll eat you for breakfast. All
Good
right,
luck.
Jeremy
Plus,
Bourne,
you
I
know
know that
this.
you have a bunch of comments here, and you've been waiting patiently. Jeremy Bourne, the floor is yours, sir.
Thank you. I think a lot of people probably have a lot of comments, so we'll spread this around. I won't take up too much time. But for anybody who's listening in, maybe for the first time, second time, whatever the case may be, you can hear the passion that this team has and the diversity of the team, in the sense that a lot of these people come from, varying walks of life, from capital markets, commodities trading, crypto trading, uh, economic theory. And all of us are trying to do the same thing, which is anticipate where the markets are going by sharing our knowledge and hopefully empowering you to make better and more educated decisions. Again, this is not financial trading advice. Go seek your own counsel and help, and talk to a financial professional. Do your own research. All we're here to do is to provide data and opinions. So if asking my opinion very specifically, I know Steve wants to be Switzerland, and that's fine. However, I will say, in my opinion, specifically, the markets are going down. I think it's very obvious in terms of what we had talked about several Genius Wednesdays ago, when this just was a small outbreak in China. Just using data analytics and probabilities alone, one could ascertain, just looking at the flight records alone and the flight paths from specific places in China, and how this world is so interdependent from an economic standpoint. You knew every single person that traveled outside of that country with the rapid spread of this particular virus. It was going to be just a matter of time before we saw it pop up in different countries. I think we all didn't realize how quickly it would happen, to where somebody like Italy would actually, lock down their country, to where you're seeing in the East Coast. And I know some folks are in New York and New Jersey. We feel for you out there, because I think, things are happening very quickly. Things are starting to shut down. The WHO now announcing today that this is now officially a pandemic. This is very, very real. Now, I've been talking about an economic downturn for quite a while now. First brought to my attention in my graduate program by one of my economic professors that predicted the 2008 crash. Said something big is brewing, something big is coming. We went to China, we went to Beijing. We saw firsthand the ghost cities and how their economy has invested everything into this real estate bubble that one day will pop, and it will pop so big it will affect the rest of the world. And that's just the tip of the iceberg. There's so many, obviously, other things that are happening. The national debt, domestic debt, it's off the charts. At some point, the bubble will burst, and it was going to burst anyway. Now add coronavirus on top of that, and all it did is exacerbate the situation and acted as an accelerant to everything that was ultimately going to happen anyway. So when somebody like Chris Pulley earlier today on this call, before I think we started recording, asked about the implications of the airlines and this particular virus, and what these types of technologies like communications like Zoom, as an example, where it allows for teleconferencing, and this may very well, due to this pandemic and at the end of it, change the way humans behave. It very well might affect the airline industry, and they may never recover. So with that said, I think that's an interesting thought, and I'd love to hear other people's thoughts around that, and how we think at the end of all this, it will change our human behavior and how the world might look very different.
I have a couple things to say.
I think. Oh,
You're recording.
Go ahead if someone wants to go first.
Because
Oh, okay. So what you were saying there is how people react or how they change. Two things you got to look at: patterns. And this might be a conspiracy, maybe not, but why did Trump build a wall? Not to keep people out, right? To keep people in. And another thing, look at like 2 or 3 years ago, there's like a small town in South Dakota or something where police were trying out militarized gear and stuff like that. So with the coronavirus too, they're saying like shave your beards and stuff. But in the same week, I see America's bringing facial recognition over to USA. Okay, so when you put a bunch of stuff like this together, it's basically saying we're gearing up towards something really big, towards a police state or a quarantine or something like that. Here's the thing. It takes 30 days to adapt to your surrounding. So if we're trapped in our homes for 60 days with nobody to talk to, humans need human interaction. And all we're seeing is news on our televisions or our phones or whatever that is geared towards making people think a certain way. What's going to happen in 30 or 60 days when we can't even, Amazon won't even deliver to us? You see what I'm saying? Like, how's this ripple effect going to affect everybody if you're trapped in your homes? You can't go talk or see human people except for the people that are in your home. What if you live alone? A lot of people got pets. If this really ripple effects across the entire globe, like Italy shut down, if everybody starts doing this, it splits up all of the uprisings that were starting to rise up all across the globe. Number two, if anybody tries to get rowdy, police state comes in. So this is a scenario. Maybe it happens, maybe it doesn't, but you got to think like that too. So
yeah, I have to fundamentally disagree on that statement. This is Russ, the CTO of CoinGenius. Hi, everyone. I think this is the first time I'm talking. But I mean, so the self-quarantines work in places like the EU, specifically Italy and Germany and all these other places, because they don't have this pesky idea called federalism, right? So I have a hard time buying in that people who love their Second Amendment rights, especially when you start talking about states' rights, will have a very difficult idea swallowing the idea of a federal government imposing self-quarantine.
So
I would
is
I
more
would completely
like
agree.
We have the choice to quarantine ourselves.
Right. Well, I would
think
agree in one way, right? So Russ, just wanted to, I'm so sorry. I just wanted to comment real quick. So you think about China as a communist economy. Obviously, this is very different. You know, they can make people do certain things because of that type of layout versus, you know, like you're saying, in the United States, we live in a very different world. And even when people are told not to do things, they always do them. So Russ, fundamentally, I agree with you there. It's going to be pretty difficult to control.
I just want to add, given that I'm probably in one of the few states where there's an active quarantine, they've already started deploying the National Guard. We've got 12, I guess you would call them high contamination centers across the United States that were fired up about 2 months ago. And they've already activated the National Guard to come in. So, whereas, what you were saying, I grew up in Pennsylvania. Okay, so what you're saying is traditionally true in terms of the gun ownership. What I honestly think in this case is you're probably going to have more coordination between citizens and the National Guard on this kind of stuff. The only real risk we have is any kind of large scale disruption to supply chain. I think you're correct about Amazon, but I think what's probably going to happen is, a lot of your local grocery stores, that sort of stuff will continue. But what you're also going to see is a lot of food deserts, right? So think about a lot of stocks, think about a lot of options out there that no one would really be thinking about. These are going to create huge new opportunities for revenue generation. But I think the larger problem that we're really going to see with this is that you're going to have a deflationary effect on a multitude of different currencies globally, which could create additional shocks. And those additional shocks could be what we were all talking about when we said, we're not going into any kind of recession until at least 2021. Well, I think you've got stacked factors here right now that are going to push towards that. But we are going to end up with quarantine zones inside the United States. We already have an exclusion zone in New Rochelle. There's one that they're setting up in Newark, and they're monitoring a couple thousand cases in New York. So there's reason for concern and there's reason for reasonable precaution, and that's what I've been advocating to everyone.
Hey, this is Samson. If you don't mind if I jump in for a little bit. If you hear some background noise, I had to walk out of the Capitol building, so they have EMS that goes by from time to time. I just want to mention about I have a bunch of things, but Italy and Greece, their economies are sort of garbage right now. I look at the moves that they're taking so that they can later default on bigger loans that they've taken out from the IMF and the World Bank. And so Italy's responses to the coronavirus is, hey, let's leverage this to get out of some debt that we owe some of these other people. Because in 2008, after the 2008 recession, there was this thing called strategic default. So at the time, for a little bit of context, I was the emergency manager at Fannie Mae, and we saw so many. They were trying to discourage regular people, Main Street Americans, from strategically defaulting on their mortgages. Meanwhile, strategic default is a well-founded principle for corporate America. They didn't want to see that for Main Street America. So when we look at these countries like Italy, like Greece, who are saying, hey, we're going all in to prevent this corona pandemic, they're really looking at, in a larger sense, of how they're going to appeal for strategic default. I think that, to echo the comments and sentiments, it will have a severe impact on the American economy, because Monday doesn't show up and the coronavirus is done. We will still, a vaccine is 12 to 18 months out. One of the more interesting things you'll see is that in the insurance industry, how they use force majeure, how they use that to cancel concerts, airplane tickets, etc. And so you'll see that the airlines, the travel industries, the restaurant folks, they're all going to line up for a bailout, because we've set the precedent where capitalism is for poor people, corporate socialism is for entities that want to get that $1 billion bailout. So that's really going to be interesting. I think that today, compared to 2008, and this is regards to a comment Steve Kwan made, we have more tools, more digital resources to keep track of the market. And when I say we, I mean just regular retail individuals, folks who have CoinGenius subscriptions, who are on the Discord channel. We just have a better pulse on the market. And so that greater awareness can also increase our anxiety, because it's like, oh shit, what are we doing? What's happening? Part of my concern is that everything we do today in 2020, shut down schools, implement travel bans, that's establishing the precedent for a new normal. So as the globe warms, climate change takes place, you have deforestation, humans incursion into environments where we've never encountered these novel strands before. Some strand of novel flu or novel virus will be pretty much annual. We don't want to establish that the new norm is we shut everything down. That means every year for the rest of the decade, the rest of America, we take a beating. And so this is my big issue with some of the measures we've been taking. We're establishing a unrealistic new normal. And that's part of the current narrative economics, or the current narrative of viralness, of, oh my God, the Chinese have this Chinese coronavirus. And so part of that is just good old classical racism, coupled with social media and how information spreads around. I'm going to wrap up my long rant, and if anyone has anything to say, by all means, jump in. So, since I'm super old, one of my first jobs, or second jobs, was I worked for the state of Florida as an epidemiologist. My specialty was HIV/AIDS, but in working in DC Department of Health in the last pandemic for H1N novels, for H1N, the novel H1N virus, I ran the H1N pods, or points of dispensation for vaccination. When we look at the number of people who are falling ill and who are susceptible, are succumb to this virus, the COVID-19, primarily if you're over 65, that's the greatest risk. And I mention this because it's March. We have a presidential election coming up. Right now, the further from 65 to 80, the closer you move up in age, the higher the mortality rate of the coronavirus is. So it's around 15% of people age 80 succumb to it, and it's still in the high, or it's still in the high single, low double digits for people over 65 who are immunocompromised. So I'm from Florida, and that means anyone with HIV/AIDS, on dialysis, who has cancer, who has hypertension. Those are immunocompromised people, and Florida has lots of retirement communities. All of this background, because in November, when folks go to vote, if we have lost, or if 2 to 3% of the older population has succumbed to coronavirus, you're going to see that in the polls. And there's absolutely nothing we can do to change that. So my last point is that in November and December, and I put this article in the chat, Christina can find it for you. One of my predictions is that Jeff Bezos bails out America. And so in December, that was just a crazy statement. People were like, Samson, that is nuts. I'm like, nope, we're headed towards a market correction / recession, depression. And for context, A single person has bailed out America before. In 1883, J.P. Morgan did it. He did it again in 1907. In 1930, in 1913 rather, on his deathbed, he arranged for the Federal Reserve to come into existence with the Owen Glass Federal Reserve Act of 1913. There is historical context for the richest person in America to bail out the government. I think Jeff Bezos will do it because his advisors are gonna say, you have all of this cash, it's losing its value, buy people's debt with it, and in 2024, you can run for president. I know it sounds crazy, I know it sounds outlandish, but there's historical precedent for a single individual bailing out America. And Christine, if you can share that link about this one time Jeff Bezos bailed out America. That's my rant for the moment.
Thank you so much, Samson. That was incredible. So jumping in here, Samson, Steve, Oz, Jeremy, folks from Team Genius, how does the normal person navigate this? What do we need to be thinking about for next steps? How do you protect your 401k as this continues to slide further down? How do you hedge your bets? How do you diversify? How do you navigate this?
Well, I was trying to share it on the notes section here, but if this is another advantage, and once again, not financial advice, just letting people know what we're doing, what we're thinking. But if you look at the Discord, I believe it was on February 22nd, one of our geniuses made a statement that this is a lot more serious than people think, and that their insiders are telling them that this is moving quickly. And the trickle down effect, which we talked about on a subsequent Genius Wednesday as well, and Samson and some others were discussing this, was the trickle down effect on the economy and the supply chain is going to vastly impact the economy. And people don't understand to the effect of how much it will in the States, specifically because we're so interdependent, as we all keep mentioning. And there was an idea floated on Discord about a triple or double reverse ETF. So that's something that I personally have done as well, and taking a note from that. Before that, I think that was on the 22nd, and I think as of the 24th, the Dow dropped 900 points. So a pretty good call. So I think that across the team, there's some people that are taking specific measures to be able to react and to anticipate where this is going. I can't, once again, see this bouncing back up. I think, people will always try to do whatever they can to create opportunities, especially the 1% that control a lot of the money and specifically control the information and have access to information before any of us. So we will always see markets go up and down, but I see a very strong downward trajectory. And once again, I'll mention what I've said in the past. I categorize Bitcoin, unfortunately, right now as a speculative hedge. It's not a true hedge at this point. I think it will cross over, but if it is a speculative hedge, it should follow the markets down for just a little bit. I'm hoping that reverses. The only wild card is really the halving. And will that have any credibility as relates to, hedging against everything else happening today?
I'd like to add something to what Kyle mentioned, because I guess for someone that's Wall Street or whatever, some might say you actually think that you agree with some of that, Steve. But I want to touch on what Kyle said, where imagine a situation where there wasn't an Amazon for just 30 days and all of us had to stay in our house for 30 days. Ultimately, what is gold worth? Nothing. What is Bitcoin worth? Nothing. I mean, I have to trade it for something that I need. Where if those that really, truly, truly believe that like this is the apocalypse and that we're going, I would ask simple questions like, have you gone to the grocery and got yourself some extra food or some extra water or like whatever you think you're going to need? Where I'm not saying that that's going to happen. Whether it does or doesn't, I don't know. I can't predict the future. But along what Kyle was saying, I do agree with some of that where those that talk about, oh, how this is going to last, or if you believe that, then I think that, I got a couple extra cases of water. I got a couple extra cases of paper towels. I have a FUD card. I mean, like all these things were in times of extreme turmoil, gold, Bitcoin, cash, it doesn't do that much good if you can't survive till the next day. Now, does that happen? I don't know. No idea. But I think what Kyle said is warranted. And I think that in times of extreme volatility, like Oz said it. There's quarantines in certain areas. Like, I don't know. I haven't decided if it's actually worth. Is it worth? At first, I was one of the people that thought, oh, this isn't as bad. The government's trying to make it. Now I'm pondering the other side where is this excuse me, is this actually worse than it is? And the government is not telling us that. So I don't know, but I would say both of those, I respect both of these people and I took what they said to heart.
Yeah, I think along the lines of what Kyle said is really important. And this is the last thing I'll share. And I know there's other people that want to speak. So my challenge as a trader, and I think the challenge of many, many traders, is developing a thesis that you feel very strongly and passionately about and actually sticking to that thesis, right? Even if the markets go up or down. And that's the whole point of CoinGenius, right? Is to provide sound data and analytics to take the emotion out of the equation, which even still, once you see the data, it evokes emotion and it's really hard. But what I've been trying to focus on is doing my research, diving as deep as I can in all these areas, listening to all of you guys on the phone, taking into consideration what you're saying, and developing my own thesis and really trying to stick to it no matter what the markets are doing. And that's currently what I'm doing today. So I think that's in line with what Kyle said. It's just plan, do your research, and just stay the course.
There's one.
Oh,
sorry.
Oh, go on, Kyle.
Just say one quick thing. There is a hedge on the crypto space. This is a neat trick that I just noticed, and so many people don't notice, is Binance created a bull and a bear pair. So if the market's tanking, you could hedge. You could have some in both and have a stop loss. If one takes off, at least you win. Or you could sit on the sideline and stable coin, or you could, if you know that it's going to keep dripping, then just go in bear, or you could just swing trade them back and forth, or use a bot. Trigger your bot to take 1 to 3% gains with a 1% stop loss, so that if it's constantly just swinging back and forth, something is making you money. Because if everybody's just bleeding out their portfolios, where you have to sit on the sideline and rethink everything, that's when sudden moves happen. Then not everybody FOMOs, but it's like, damn, I should have done that. Then you start second guessing yourself. So that's one strategy to get in the crypto space, doing something like that. Anyway, sorry. Go ahead, guys.
This is Samson. So I think Christina had asked what are some practical steps. So I tell everyone, set up a self-directed IRA, because unless the government completely collapses, you're going to pay taxes. And if you're thinking that, hey, my 401k is tanking, even if I do anything, let's pretend it's March 2008. If you do nothing, you're going to lose 90% of value in your 401k anyhow. So stick it into a self-directed IRA. And that way you have a little bit more control over what you're actually putting your money into. And just to go back to that time Jeff Bezos bails out America, to Kyle's point, to Steve Kwan's point, Amazon as an entity. So back in the day when you had the Hudson Bay Company, the Dutch East India Company, Hudson Bay was in Canada, Dutch East Indian was in India. You had these robber baron companies that acted as nation states. And so Amazon has enough money and the market for Jeff to bail out America, along with probably Buffett and Bill Gates, and come in to replace the Federal Reserve. Bear with me. I know this sounds super conspiratorial, but when money is a confidence game, who has better customer service than Amazon? Who has more cash on hand than them? The Federal Reserve banking system is just a private entity who for the last couple hundred years has been in charge of money. Amazon was going to say, we're losing money. We can pivot fully into this digital economy. People have greater confidence in us as an entity. We can replace the Federal Reserve Board. Any other time, this would be crazy lunacy, but I think we have a confluence of things that are happening in the market where people are going to turn to someone they trust and say, okay, Amazon, I'm a Prime member. I will do my banking with you. In which case, Amazon rolls out its version of a blockchain-based token or cryptocurrency so that you can get the things you want delivered to your house. Because to Steve's point, if you have gold or Bitcoin, but you can't order toilet paper or hand wipes, you're going to be on the short end of that stick.
That does sound reasonable.
Hey, Samson, I'm so sorry to interrupt you there, Kyle. We had a quick internal comment, and Samson or Steve or Kyle, hoping you guys can shed some light on this. There was a comment here about shorting and just saying shorting is probably not a great idea in the time of stress because you have to borrow and then pay that rate, and that rate changes when you're in times of stress. Can you guys elaborate on that so people don't lose their shirts on some strategy that works in a normal market regime, but not in this one?
I'll go last.
Man, I'll touch on that where most of my trades are and positions. When you hear the term, well, this is getting cheap, or wow, the Dow's down 2,000. What was the Dow down 2,000 in? It's just an exchange rate. It was exchanging the Dow 30 stocks for US dollars. That's what it was down in. So the Dow was down $2,000 in US dollars. Well, how much was it down? Bitcoin was down 4%. The Dow was down 4%. So in Bitcoin terms, the Dow was unchanged. And I guess it simply is looking at whatever pair you are interested in, whether that's Bitcoin versus the Dow or gold versus silver or treasuries versus, like, everything's a spread. So essentially shorting something, does that mean you want to short Bitcoin and be long? You want to be short Bitcoin in US dollars? Then that's a trade that you should be pretty familiar. That person should be familiar with. Like, where I just look at things as exchange rates and pairs, where I've done gold versus S&P many, many, many times for many years, or crude gold, Bitcoin gold. Like, these are things that the listeners have heard me talk about for a while. I think for something that I'm not super familiar with, but when I talked with Kyle briefly, an exchange traded ETF, such as a bear pair on Binance or the inverse spider, the inverse gold, the inverse treasury yield, those are things that, especially if they're non-levered, that people can familiarize themselves with. I mean, it's just taking the opposite exchange rate that most people are familiar with. Like, most of the time, people exchange dollars and buy the S&P 500. Think of it the other way. Now you're exchanging your dollars for the right to short that instrument. It's the same context where your risk is exactly the same on an on a fundamental basis. Obviously, the point at which one shorts or the point at which one buys volatility has its own risk, but that's a whole nother talk.
Thanks, Steve. Samson, I'm going to pick on you for a quick comment. Or Kyle, sorry, I think you wanted to say something there.
Yeah, especially what Steve said. Like, if it's already dumped, why do you want to? Like, if it's dumped for a day, you don't want to get in a short. It's probably going to rebound, but it might bleed out. So that's where technical analysis comes in. But with the bull bear pairs, I think we were discussing this the other day, Steve and I. The tokens themselves are only 3 times. So I think you need some sort of like different paperwork or something to allow global people across the globe to trade anything above 3 times. So that's what those tokens are. But the thing is, if you look at a 1-minute chart, they're swinging at like 1 to 7 or 8%. If you get in on those swings and just do them back and forth, it doesn't really matter. Like, you got to see the bigger time frame of what's going on in the space. But as long as you can get in there and swing those, you can quickly amplify. It takes like 81 days to, let's say you start with like $1,000. If you got 10% every single day compounding, doing something like that strategy, it takes 81 days to turn it into $1 million. So it is possible. It's just really, really hard. But if you use something like a bot that can swing trade back and forth and you have the settings right, it works for you while you sleep. So I'm not saying go all in or anything, but if you have a hedging strategy, there's always ways in crypto. Like, crypto's going to be around. It's just the new market. There's just too many big, very big corporations using crypto, getting licenses, all this other stuff. It's not going anywhere. Crypto will be around. So if you just know how to move around it, You can make money every single day. Just don't get stuck in a long or a short if it's going to go completely opposite. That's the only thing that I have to say about that. Like, you can make money every single day if you want. Just got to know how.
So Kyle, I guess the fundamental question for the average person is the following, which is, if you don't understand technical analysis, if you don't have the time or ability to monitor the markets every single day, is it better to hodl? Or
here's my thing about
what's the
hodling.
approach?
Yeah, my thing about hodling is, okay, so there's so many different ways to invest in crypto. If you hodl, the thing is there's so many fluctuations, and the main thing is it might go up 40% in a day, then it might dump 20% in a day. Depends on what coin you're investing in or whatever. Do you really want to sit and wait and hope? Because hodling is hope. Hodling is ultimately yes or no, the market will go up or down. That's all it is. Because based off of whatever information you're getting, most of the crypto information we're getting is from corporate interest news sources. They got so big, they sold out. So now they're trying to like mess with our heads. Oh, Bitcoin's going to tank. Bitcoin's going to tank. But next thing you know, it pumps. And then it pumps and everybody's like, keep pushing it because they're getting FOMOers in there. And then all of a sudden one whale pulls out 10 or 20 billion bucks, or there's plus token scam or whatever nonsense. All of a sudden everything switches because there's bots waiting, there's sell orders waiting, there's longs and shorts. You got to look at the gaps. Gaps usually tend to fill. So it's like looking at specific market conditions within the space. The more you know, the better off you are. If you're trying to hodl, like right now would be a good time to buy Bitcoin, but it hasn't. The trend has not bended. It has not turned around. Looks something like a head and shoulders. If that's the case, this could really take off, but there's no signal for that yet. So if you're hodling, it's really like this has never happened in a pandemic before. Crypto has not been around in the pandemic. It was created after the last recession. And if what you guys are saying, this could be worse than the previous recession, what is that going to do for crypto if it didn't hold up in the last couple of weeks? But at the same time, what if this market that had all of the bullish signals, all of them, except for the one that's like, what if? And that what if was plus token selling off a ton of Bitcoin, and that could have been a trigger. So what can you do? The only thing you can do is play within the playground. If there's no fresh money coming to the market, it's the same people going back and forth, just pulling money from the small fry. What can you do? All you can do is play in the middle or use bots. If you want to hold, good luck. You might be waiting 5 or 6 years to profit. Who knows? Just depends on where you buy, you know? So that's what I have to say about that. Like, it's a gamble if you hold.
So Kyle, what I'm
Jeremy.
hearing is it could go down, or it could go up, or it could stay the same. Right?
That's pretty much that's good. Right now I'm looking at the charts right now. We're at a super strong support on Bitcoin and Ethereum on a head and shoulders. Like this week, we should know, like, if this thing's going to keep bleeding out. If it keeps bleeding out, that means people are putting their money somewhere else. If they're putting it somewhere else, what we should talk about is where people are most likely going to put their money, retail or smart money. And one thing that I noticed over the years, like I'm a young old guy. So like I'm sure there's many people in this chat who've been through way more than I have in financial world. But what I noticed is, like, what are the things that survive a recession or a depression? Because my grandmother just died last month, and she was 103. So I got all the stories. But people put money into things like entertainment. Look what industries never collapse in a recession or depression, and that's probably a good place to put your money, or at least think about it, you know. Or at least someone mentioned creating opportunities. While most people are panicking, some people are like, ooh, I see potential to make profits here, or to provide a solution to a major problem, because new problems will arise when we're in a different state of mind. So what are those problems? And the people that are seeing solutions to the problems are the ones that will survive and become the next Jeff Bezos. And as someone was saying about Jeff Bezos, I've noticed patterns there too. Out of the blue, he goes and donates a ton of money to some health thing. I forget what it was. It was like 3 weeks ago, 4 weeks ago. He buys the biggest property in all of Los Angeles to cement himself in Los Angeles, which is becoming the new San Francisco tech. Over in Venice, like everybody's moving over there. TikTok's moving over there. All these other tech people. So when it was mentioned that he might be running for president, I totally see the signs. Oh yeah, I totally see it. Trump setting the standard for being a super wealthy person and being a president, basically also a reality star. You got Bezos here, who pretty much understands business and has good customer service. Does that make a good president? Probably. And when you see all the things that he's doing, cementing himself and positioning himself, you don't just run for president. You need to get the public interest. He's always been a private person, but now he's coming more public. Look at the signs.
Hey, real quick to jump in here, Kyle. Everything that you're saying is really, really great. Really appreciate the commentary there. Want to pivot slightly because I think there's some really incredible minds on this call that haven't even yet had a chance to speak. I want to start with Chris Pulley, if you're open. So for those of you who don't know, Chris Pulley really runs the operations for Bad Crypto entities and Bad Crypto podcast. And the great thing about Chris is that he speaks to projects and people in this space every single day. So if anybody has a pulse as to what's happening in crypto and blockchain, I would say he's the guy. So I would love to hear your thoughts in terms of what you're seeing, what you're hearing, what opportunities exist, etc. Chris, are you available? Okay, maybe we'll come back to him. Maybe he's stuck on mute or had to take something. I guess we can move to some of the other folks as well. I know we have some other folks that are on the team of CoinGenius specifically, and Tim and Carl, and you guys are also keeping your eyes on the markets. Love to open it up to the greater team to make some comments and give thoughts about what they're seeing.
Sure. I mean, I feel pretty in line with a lot of the things everyone's saying here. There's a little bit of everything that I take away from it personally. And one of the things that I like to always remember is that most cryptocurrencies are on a network, on a hash network. So at what point does a falling crypto find support with the tens of millions, billions of dollars that are in on the mining side of things? Where does that hold up in the value? There's a lot of fun charts out there these days, which is the quote unquote bottom for a mining organization. At what point do they start buying up to counter their costs and things of that sort? So there's a whole business inside the business of trading crypto. So it's always something to consider. And I'm not sure what that value is nowadays. I know that was in the past few months back, it was like sixes, something like that. So if we see a big old slip, maybe that's somewhere where you can hedge a potential jump in. If you're new to this space, like people are saying, just pick a strategy and go for it. In that regard, find different spots where you can be an entrant if you never had before. Like everything in the Warren Buffetts of this world, there's always an opportunity. So find yourself an opportunity and dig one in, and go for it and stick to your plan.
Yep, absolutely. So Russ, really interesting. I want to get your take on this. You come from a background of Bayesian analytics and getting your PhD work and understanding seismic activity globally, which act as event triggers that help you to forecast larger seismic activity globally. And just taking a line out of that and how you would approach this and looking at signs as it applies to the economy or the crypto space, what's your outlook from a data science perspective?
Hey, Jeremy, sorry to let you down, but Russ stepped away from the table real quick.
0 for 2. Okay, Christina, I'll give it back to you then.
Thank you. It is difficult to try and get everyone coordinated if they don't know that we're going to be calling on them in the first place. So we'll circle back to Russ here in just a quick moment. But in the meantime, I'd like to ask Steve. Steve, we've been talking a bit around our coin score development, and this kind of ties into the question that Jeremy just asked Russ. So basically for our coin score development, we're looking at major fundamentals of the coins. We're looking at like a liquidity coin score, and Carl brought up network security. We've talked about the people in the community and the developers behind it. We've talked about the influencers. We've talked about the investors, right? There's all these data points behind these companies, and that allows you to do all this cool data science stuff. So now that Russ is back, Jeremy, I'm going to turn it back over to you so you can quickly rephrase your question, and then I'm sure he'd like to jump in.
Okay, so Russ, I was just asking, from your past experience in Bayesian analytics and seismic activity and doing all the forecasting, based on what you're seeing today in capital markets and crypto, how would you approach this, or what are your thoughts as it relates to anticipating market movement in this space today from a data science perspective?
Yeah, no, definitely. So I think we have to use one of my favorite quotes from Donald Rumsfeld, which is that we have known knowns, we have known unknowns, and unknown unknowns. And from a typical Bayesian perspective, what you want to do is, the Bayesian way of thinking is, instead of thinking of life as a series of observations that we can count up in whatever we view it from a probabilistic standpoint, thinking about, okay, what's the likelihood of an event occurring, whether it is, a price drop, whether it's an earthquake or whatever. And all of these systems are driven by either internal dynamics that we can quantify, or external dynamics that we know are there but don't know what influence the system, or just stuff that we just don't know about. So what we try to do from our perspective is we try to constrain those uncertainties. Because once we're able to constrain the uncertainties around, say, okay, the sentiment around Bitcoin, or the sentiment around any of these types of confounding factors, right? If you go in and say, well, Bitcoin just follows this time series trend of, it's a price one day, price another day, you don't know what you're just having one observable. But in reality, we really know that there's a whole bunch of other factors, specifically things around sentiment, around large movement and momentum, that will help drive this forward. So what we really need to do from a data science and machine learning perspective is start being able to quantify the uncertainties around those features in our models, such that when we start doing these forecasting models or deep learning models to say, okay, tomorrow the price is going up by N% or down by N%, that we really want to have uncertainty estimates that can show the robustness of our understanding, as opposed to say, let's just fit a curve to this and let's hope this goes well.
Really interesting. Do you want to discuss what CoinGenius is working on? Just give a little teaser in terms of the NLP side of things and the sentiment analysis, and how we're trying to capture this globally to really help ascertain event triggers and how things are moving.
Yeah, so in reality, we have two primary sources to gauge sentiment around crypto. The first is social media, and the second is news articles. And what we want to really understand is how specific regional activity, given, say, if we were back in December and we had the original news article from Wuhan province saying there's this weird thing called the coronavirus, what does the sentiment around that look like initially? What is the social media impact of that? Is this trending? All of these different types of factors that will eventually say 2 or 3 weeks down the line that, oh, you're going to see a positive trend in sentiment or a negative trend in sentiment around this given subject. From there, we can take those sentiments and extrapolate to specific geographic regions where maybe there are highly localized locations for Bitcoin or Ethereum or whatever, and start tracking from a geographic perspective. They'll then eventually be fed into a more robust model that's saying, okay, here's the sentiment across all of these locations. What are the most important? What are the not most important? Where are these factors most likely going to be attributed to modeling and understanding the dynamics of forecasting in the future. And that's what we're going to be unveiling within the next month and a half to 2 months, is this phase one of being able to gauge real-time sentiment of Bitcoin, of Ethereum, of Ripple, of Dragon Chain, of all of these different technologies, both traditional crypto and blockchains, so that we can start helping our users not necessarily forecast what the price will be tomorrow, but gain a better understanding of the uncertainties around the sentiment so that they can make their own informed decisions.
Very cool. Thank you for sharing. Christina, back to you.
Well done, Russ. All right. Well, we have Chris back now. So, Chris, I'd like to call on you. But, Jeremy, if you could rephrase your question to Chris so that he can have that blank slate, that'd be helpful.
Sure, no problem at all. So, Chris, the question I had for you is just wanted to get your thoughts and opinions in terms of the market, especially crypto and blockchain space. I had mentioned to everybody, obviously what you do and your background and operations on the bad crypto side of things. You guys get exposed to so many different companies. You go to so many events and conferences. I don't think there's anybody who's better suited on this call that has the hands-on experience as well as feet on the ground in terms of understanding what's happening, what the sentiment is, and where people are going, and what opportunities people see with the current infrastructure and things that are unfolding right now.
Yeah, I appreciate that, Jeremy. Yeah, I mean, the Bad Crypto podcast has put us in a very interesting position as a really an advisory and strategy group. So we've grown it from just the show itself into a complete infrastructure, and we've been building the unique network of all the different projects and their different categories. Thankfully, this week's been a little bit lighter, and I think it may have something to do with the market. But up until this week, over the past 3 months, my team has been putting me on video calls with 10 to 12 projects a week, helping guide and direct them to the help that they need. And what's been interesting is that it doesn't seem as if what's going on in the global market is really impacting those conversations at this point. I believe the severity that's transpiring into last week and the beginning of this may change some of that. I'll be able to maybe even bring this context into some of these conversations through the rest of this week and next, and maybe bring a little more insight to the call. But even today, speaking with one of our strategic law partners, they're just still, everybody's still moving in the direction they were going. It's if it has a direct impact to the market itself, then there's a conversation. But it seems that most of the projects are just keeping their blinders on and trying to stay the course, regardless of what the market's doing. Many of them, in this case, they can't do anything but stay the course. And so I imagine we'll see some end up by the side of the road by not, looking out ahead of what's physically happening across the globe. And then there'll be those that, because they stayed the course with their blinders, may come out on the other side and, won't be worse for wear. But I'll bring more data back and try to help influence the conversation in next week's call.
Thanks, Chris. I would note that I'm really interested in the blockchain supply chain companies. I think that is the biggest thing that's going to be impacted by people having to work from home and getting products over to them, just all over the globe. Blockchain supply chain is a great use case. I'd love to see some more mass adoption by enterprises taking advantage of that.
With that we can even do some outreach there, as we have the supply chain as a category we follow and companies we follow and have relationships with. In addition to some of the more traditional supply chain corporations out there, like the Ariba product and things of that nature, we could probably bring some insights directly from some of those executives that we have relationships in the traditional supply chain side of the business. I believe SAP bought Ariba here about 4 or 5 years ago, and that market's been amazing for everybody involved, as SAP is trying to pull their few thousand clients through that Ariba portal. So we'll bring some of that data back and hopefully shed some light on the supply chain side.
Awesome. I'd love to create a little supply chain micro universe in CoinGenius so that people can find these things easier, whether you're a researcher, whether you're an investor, a trader, or you're Fortune 500 trying to understand how this technology works and what your options are and the pros and cons for each one of these platforms. That's all data. I'm interested. Thanks so much, Chris. All right, we will turn it over to Steve for final thoughts, and then we're going to wrap up this Genius Wednesday call. Mr. Stephen Kwan.
Yes, sorry. So I'm impressed by how many people came on today. I guess each week there's been more and more people, and I'm always feel blessed and happy that there's people that want to even listen to me. That's why I always have love for Coin Genius, because Lord knows my wife probably thinks that I talk way too much. I thank new entrants such as Kyle, who I actually had the opportunity to talk with last week, for bringing up points, new and unique points. Chris, Jeremy, Carl, some of the regulars. I think that if I could say one thing, and I don't like to give people advice often, I just try to put facts in front of people so they can make their own decision, is whatever your strategy is, whether that's buy and hold for 20 years or you're a 1-second algorithmic trader, is just stay true to your strategy. The guy that all of a sudden, switches from he's a 1-year hodler, as they would say, to now all of a sudden he wants to be a 1-second trader with little to no research, maybe not the best time. And the second is, the other way around, the 1-second trader who all of a sudden takes a loss. It's like, well, I'm just going to hodl this. Well, is that what you went into this investment strategy with? Whether that's crypto, crude, options, 10-year, inverse ETFs, whatever. And finally, is just be comfortable with, use an amount of capital that someone is comfortable with. And I try to always adjust it for basically implied volatility. If you're a 1 Bitcoin trader when Bitcoin's at a 20 volatility, if all of a sudden Bitcoin's at a 200 volatility, it's almost like an implied leverage thing or an implied margin, where if things start moving quickly, you can make a lot, you also can lose a lot. So I would just point out that watching implied volatilities and watching global markets and seeing what are drivers and staying true to one strategy are some of the important points that I try to do.
Awesome. Thank you, Steve. Stay true to yourself and do your own research. Well, awesome. Thanks everyone for joining us today on Genius Wednesdays, brought to you by the geniuses at CoinGenius. We encourage you to join the crypto conversation by participating in the CoinGenius Premium Discord channels, checking out our website, coingenius.ai, or you can always email us at info@coingenius.ai to comment on what you heard here today or discuss our consulting services. Until next week, this is Genius Wednesday.
Awesome. Thank you, everybody, for joining. Really appreciate it. We'll all talk soon. Thanks.